What is your dream? Is it to run a multi-billion-dollar company or to write the next literary masterpiece? Well, whatever your dream may be, there's probably an angel investor out there willing to invest in you. For years, and perhaps decades, the best investors in the United States have enjoyed double-digit returns. For two reasons, following these elite investors is a good idea. It is possible to improve your financial intelligence by first gaining an understanding of how these investors think and act. It's also possible that you'll get some ideas from their investments. So, check out this video to learn who some of the biggest investors in America are. Number 1. Warren Buffett. Warren Buffett hardly needs an introduction as one of the world's most successful investors. Berkshire Hathaway, the $500 billion conglomerate in which he serves as CEO and chairman, is the holding company for all of Buffett's investments, including the business's fully owned subsidiaries and stock holdings. Geico, Dairy Queen, and See's Candies are just a few of the well-known firms featured in this list, and several well-known stocks. Investors revere Buffett and Berkshire Hathaway because of his stellar record and the stock's legendary status. When Buffett took over the company in 1965, a $1,000 investment was worth $27 million in February of 2020. The company's A-Series stock is today worth $300,000 per share, whereas the company's B-Series stock is only worth about $200. As a value investor, Buffett made a lot of money. Later on, he switched to growth investing and made even more money. As a long-term investor, he has stated that his optimum branding duration is eternity. Buffett is renowned as the Oracle of Omaha for his performance and laid-back demeanor, which mask his razor-sharp business acumen. Thousands of shareholders attend Berkshire's annual meeting in Omaha, dubbed the Woodstock of capitalism. Number 2. Charlie Munger. Charlie Munger is best known as Warren Buffett's long-standing business partner and vice chairman of Berkshire Hathaway, a position he has held since 1978. While he's best known as Warren Buffett's right-hand man, he has a lengthy history of profitable investments and a successful profession as a lawyer. When shareholders ask him questions during Berkshire's annual meeting, he's known for giving two kinds of answers. First, Munger might impart some sage advice as to how to be a successful person in today's environment. If he thinks you'll be happier if you set your expectations low, or you're envious of others and pity yourself, he'll say so. He's quick to label such self-defeating tactics as stupid. Following a lengthy response from Warren Buffett to a shareholder question, he may respond with a no comment. The adage, invert always invert, has made Munger a household name in the investment community. For investors, Munger proposes avoiding what they know would lead to a failure, rather than searching for the practices that would help them succeed. Investors have more chances to succeed when they prevent surefire losses. Number 3. Peter Lynch. When Peter Lynch was in charge of Fidelity's Magellan Mutual Fund, one of the most renowned mutual fund triumphs of all time, he achieved an impressive return. Between 1977 and 1990, Lynch averaged a 29.2% yearly return for investors who stayed the course. Sadly, many people did not. Investing in a fund operated by a strong manager can quickly overshadow other hot funds since money follows the hot ones from one year to the next. That was one of the primary points Lynch had to teach investors. Lynch is likely most known for his common-sense approach to investing, which he outlined in his two classic investing books, one Up on Wall Street, 1989, and Beating the Street in 1994. Buying what you know is an example of Lynch's well-known counsel. It's important to keep your eye out for products and services that your friends and family are talking about, because that could indicate a new business in the making. Number 4. Bill Ackman. Pershing Square Capital Management's Bill Ackman is a well-known investor in the recent decade. He's placed several large bets and isn't afraid to tell the world about them in the media. During the financial crisis, Ackman won one of his first bets against mortgage insurer MBIA. In addition to General Growth Properties, a mall operator, he also cleaned up at Howard Hughes Corporation, where he serves as chairman of the board of directors. While he's well known for his wins, he also had significant failures, including well-publicized bets on JCPenney's recovery and a short position in Herbalife, both of which were unsuccessful. If the stock price of Herbalife dropped significantly, or if the company was, as he claimed, a Ponzi scheme, he would profit. Billion-dollar loss. Ackman made his case against the stock in a dramatic meeting with Icahn, next on this list. Even Ackman, one of the greatest investors of all time, may be incorrect. Number 5. Carl Icahn. Carl Icahn, a former Princeton philosophy student and one of the first corporate raiders of the 1980s, is noted for his rigorous approach to investing. They employed greenmail, asking a company to purchase back its stock at a high price in exchange for the investor abandoning it, to extract points from companies. Icahn has been no less aggressive when it comes to buying up firms, selling off divisions, and forcing the scale of other companies. He's one of the world's most successful activist investors, and his tough negotiation style is well known. On national television, Ackman famously called Icahn a liar and a crybaby, and made a fortune by buying up a large portion of Herbalife stock and holding it for years. His investment in Hertz, a major provider of rental cars, went down the tubes, and he lost $1.8 billion when his firm announced it would file for bankruptcy in 2020. Number 6. Ben Graham. Ben Graham is revered as the father of value investing, a method that aims to purchase $1 in value for as little as 75 cents. He was one of Warren Buffett's early mentors and is known for bringing intellectual rigor to the art of investing. Security Analysis, with co-author David Dodd, and The Intelligent Investor, one of the most popular investing books, because of its simplicity and clarity, are the foundations of his investment philosophy. When Graham introduces the persona of Mr. Market, he is attempting to highlight how erratic the market can be in the second book. A stock may be willing to sell for a low price one day and a high price the next. You may never know which Mr. Market will show up on any given day. Graham is known for his cigar butt investing, a strategy in which a stock still has some value, but there's no risk involved in purchasing it. Number 7. George Soros. He's one of the world's most well-known investors, although Soros prefers to trade or speculate rather than invest. In other words, he places bets, sometimes hundreds of them, and waits for the price of a stock to rise. He's not a long-term investor like Warren Buffett, who often buys and holds. It's not uncommon for him to purchase back into a position that he recently sold when new information suggests that the market is headed in the correct direction. He gained notoriety as the man who broke the Bank of England after placing a $1 billion wager in 1992 that failed miserably. George Soros is also well known for his use of the idea of relaxivity when it comes to investing in financial instruments. The belief that investors can make markets successful or unsuccessful is a major concept in this book. It's possible that, even in the face of setbacks, investors will continue to support a company that is currently losing money. The same is true if they refuse to lend money to a struggling business. In other words, a company's belief system can become a self-fulfilling prophecy. This video hopes to introduce you to the world of investors right now, looking for the next best thing they can invest in to make more money. Of course, the names might differ, but the process stays the same. As you can see here, not all investors are alike. Some don't invest without a certain mindset or strategy, while others might focus on one particular area over another. But essentially, they're all looking for new money-making opportunities. So look out, because your idea could be their next great investment.